In this market analysis, Plan B is about to share two major updates on the Bitcoin market. Recently, he shared two observations that have gone viral and are causing a lot of discussion among his followers. Some people agree with him, while others disagree. As Bitcoin's price stays around $90,000, many are wondering if it will soon cross the $100,000 mark or drop slightly. Plan B is going to discuss this more. Let's go over his updates one by one. In his first tweet, he said, "You can still get ahead of Saylor's $42 billion Bitcoin buy and Trump's $92 billion Bitcoin buy, but not for long. You have inside info now. But once the mainstream catches on, Bitcoin might never go below $100,000 again." This tweet got some people excited, thinking it was a huge opportunity to get in before Bitcoin's price skyrockets. Plan B is suggesting that big players like Michael Saylor and Donald Trump are planning to buy massive amounts of Bitcoin soon, and once the general public catches on, it'll be too late to buy at lower prices. Some followers agreed, while others weren't so sure. Still, the idea of jumping in early before big money floods into Bitcoin sparked a lot of conversation. In his second tweet, Plan B made a bold statement and said, "Let's break the stock-to-flow model to the upside." For those who aren't familiar, the stock-to-flow model looks at Bitcoin's scarcity compared to its yearly production to predict its future price. This is where Plan B triggered a lot of debate. A follower quickly responded and said, "I don't understand why people refuse to see why the line is at $500,000. Plan B responded saying, "I get it. Explaining logarithmic charts and exponential growth is tough, but if you understand them, you have a big advantage in investing." Here, Plan B pointed out that understanding how Bitcoin grows in value can give investors a real edge. The more you understand these complex concepts, the better position you're in. Another follower joined in and said, "The problem with exponential growth in assets is that there's only so much capital to keep pushing the price up. It's mathematically impossible for Bitcoin to keep growing like it has in the past." Plan B responded with his perspective and said, "I would argue it's mathematically impossible not to grow exponentially until Bitcoin hits about 50% adoption. Bitcoin's market cap is still tiny compared to all other assets, so there's a lot of room to grow." Plan B believes that Bitcoin is still in the early stages of adoption. Even though Bitcoin has come a long way, there's still a lot of potential for growth as more people and institutions start using it. He points out that Bitcoin's market cap of $1 trillion is a drop in the bucket compared to other assets worth hundreds of trillions of dollars. The follower pushed back a bit, saying, "I get that Bitcoin is still early in adoption, but growth is slowing down. The cycles have gotten smaller. 100x in 2013, 20x in 2017, and only 7x in 2021. As Bitcoin gets bigger, it needs way more capital to keep growing, so exponential growth will slow down." Plan B acknowledged the slower growth in recent cycles, but remained optimistic. He responded, "Yes, you're right about the numbers. 100x, 20x, 7x, so maybe you expect a 3x increase, but what if we see another 20x? Adoption grows exponentially until around 50%, and then the value follows suit. Metcalfe's law says value increases as adoption grows." Plan B is sticking with his view that Bitcoin could continue growing at an exponential rate, thanks to its early adoption phase. According to Metcalfe's law, the value of a network like Bitcoin increases as more people use it. The more users, the higher the value, and that growth could still be massive. The follower responded and raising concerns about how realistic this growth is. He said, "Metcalfe's law assumes smooth growth, but Bitcoin faces obstacles. Most early adopters were tech-savvy risk takers. Getting to 50% adoption won't be as easy, and new investors and capital constraints could slow things down. Bitcoin's size means it needs trillions to keep growing. And the question is where that capital comes from. Plan B answered with his take, saying, Metcalfe's law doesn't assume smooth growth. I think assets like gold, 20 trillion, and real estate, 100 trillion, will lose out as Bitcoin grows. Plan B is suggesting that as Bitcoin gets bigger, some of the capital currently invested in traditional assets like gold and real estate could shift toward Bitcoin. These markets are much larger than Bitcoin's, so even a small shift could significantly impact Bitcoin's price. As the conversation went on, the follower started to understand Plan B's point of view and said, yes, I get it now. But the capital moving from gold and real estate will probably move slower than the retail money that fueled past Bitcoin cycles. Still, I appreciate your thoughtful analysis. This is an important conversation. Plan B responded. I love these kinds of discussions. It's true that capital shifts might take time, but Bitcoin is already ahead of gold and real estate in terms of scarcity. So I think we could see fireworks. But who knows? Maybe I'm wrong. Here are the main takeaways from this update. Bitcoin scarcity. Plan B sees Bitcoin's limited supply as a major factor driving its potential for significant growth, especially as more people begin adopting it. Institutional influence. Large-scale purchases from institutional investors could push Bitcoin's price up, making it more difficult for regular investors to buy in at lower prices. Early adoption stage. Bitcoin is still in its early adoption phase, meaning there's a lot of room for growth as more people join the network. Metcalfe's law. As Bitcoin attracts more users, its value could increase quickly. The more people use it, the higher the value becomes. Capital shifts. Bitcoin could draw capital away from traditional assets like gold and real estate, which could drive its price even higher. If you found this analysis helpful, be sure to subscribe for daily updates and insights from top crypto experts. Your support helps us continue delivering valuable content. Thanks for watching.